So welcome back. This is lecture 13 of marginal costing and this is for CMA intermediate June 2022 attempt. ठीक है, तो ये हमारा लेक्चर 13 है जो कि हमारा लास्ट लेक्चर होगा मार्जिनल कॉस्टिंग का. ओके, चलिए. ओके, so we just go, we are doing problems and let's go down straight away to this is what we finished in the last session. This problem, illustration 8. Now we are going to illustration 9. Okay, so what does this say? S Limited furnishes the following information relating to the half year, okay, ending 30th June. So F is given for half year again, similar to previous problem, okay, because half year data is there. Sales is 1,50,000 and profit is 30,000. Okay, during the second half of the year, company has projected a loss of 10,000. So again, first half, second half, like previous problem. Okay, and second half you've got a loss of 10,000. And then what they've asked us to calculate? BEP and margin of safety for 6 months ended 30th June. That is first half. Okay, so this is the first half. And expected sales volume for the second half, assuming that PV ratio and fixed expenses remain constant in the second half also. So kind of similar problem, but they have just changed the make of the problem. That's it. They have just adjusted it a bit. It's very closely like the previous problem. BEP and MS for the whole year. Okay, so chalo. So what we have to do is here again we'll prepare statement for first and second half and total like we did last time. This first half, this is second half, so this is total. Okay. Okay, so this is our first half, second half total. So just put the data as it is. I've just put the data in. Okay, so ठीक है, अभी तक कुछ भी नहीं किया हमने, बस डेटा वैसे का वैसे डालना है हमको. इसमें ये F है आपका फिक्स्ड एक्सपेंसेस, इसको यहाँ डाल देंगे. ओके, और यहाँ पे आपको बोला है कि F is same for both half. Okay, yeah, here assuming that PV ratio and fixed expenses remain constant in the second half also. ये 45,000, that means in both cases it will be 45,000. इसलिए दोनों में डाला गया है. Okay, this is what we have put this in. Okay, same in both. And then sales here is 1,50,000, and in the second half we do not know. So let me just do it like this. Remove this. Okay, remove this. Remove this. Okay, so I've just put in data here. What I have got, 1,50,000 is the sales. I put it here. 45,000 is fixed cost. This 30,000 profit we know, correct? So this I can put here. Now, if I add fixed cost and profit, I'll get contribution 75,000. Understood this one, right? Because your C minus F is equals to profit, right? So C will be equal to F plus P. Okay, so that's why if you add these two, you will get this. ठीक है, F और P add करेंगे तो ये मिल जाएगा. अब ये आपको मिल गया, ये 75 है, ये 150 है, तो ये भी 75 होगा, correct? Right? So this is the one part we got. Now here the second part, again you can use this relation. Okay, C minus F is equals to P. So P you have to put as minus here. So here this will be C minus F is equals to P again. Okay, and your C will be equal to F plus P. Okay, so F is 45,000, and because this is minus, this will become minus, right? F plus P is basically minus 10,000. I'll put minus 10,000, it will become 45,000 minus 10,000. Okay, which is how much? कितना हो जाता है? 35,000. Okay. Right. So now यहाँ पे ये we also know that assuming that PV ratio and fixed expenses remain constant. Okay. चलो, we'll calculate the PV ratio. 75 upon 150 into 100. Correct? इसको निकाल देते हैं. Is equals to 75 C by S into 100. Right? So C by S into 100 आप करो, you'll get 50%. Okay. Try it in your calculator. So अब जो है, now this PV ratio will hold good for this one also. Okay, so this PV ratio will be the same for this also. ये बताया गया कि it is constant करके. And normally PV ratio will remain constant. Okay, for various quarters also it will remain constant. Okay, so up now what you will do here is, in this case we'll use this relation now. Sales into PV ratio is equals to C, contribution, correct? So I can say sales is equals to C upon PV ratio. Can I say that? Correct? C upon PV ratio. So do C upon 50%. You will get sales here. Okay. C upon PV ratio, you get sales. That's it. So we got everything in this problem. You want to write variable cost, you write it. And I mean, in most cases, you won't need it. Okay. This will become 35,000 here. Right? Okay. So, chalo. So let us find out the totals. This plus this, okay, 1,50,000 plus 70,000. From this total, all total. Similarly, I'm doing total of all things. Okay. Right? I've totaled all these lines. Okay. Now let us see what. So we have got the statement now. So what is this? Basically, this is our marginal cost statement. Okay. Right. So now what are they asking? Let us see. BEP and MS for 6 months. So in this case, they want BEP and MS. So chalo, can you calculate and tell me, anyone? How much is the BEP? How much is the MS? Tell me. How much will be the BEP? You're not studying cost accounting at all. Only when tests are taken, you study or what?
The BEP 90,000.
Huh? How much? F upon PV ratio, 90,000. And then margin of safety will be your sales minus sales at BEP, correct? This becomes 60,000. This is what they asked, right? BEP and MS. Now, in second, what have they asked? Expected sales volume for the second half of the year. Sales they have asked, assuming that PV ratio and fixed expense remain constant. So this we have already found out here, right? This is 70,000. Okay, this is already found. The third is BEP and MS again for the whole year. Same thing you have to find for the whole year now. Okay. So again, your F will be same for the whole year. Okay, just do BEP equals to F upon PV ratio. Okay, and then margin of safety is equals to sales minus break-even sales. Okay. Okay, understood? This is what is the second problem now. 9. Okay. The next problem, let's go to the study material there and see. Any doubts in this problem? किसी को कोई doubt है? Okay. This illustration 8 we did, 9 we did, right? 10. Okay. So let's see what they are asking here. Statement of this company for the month of June. This is the monthly statement. There are two products, L and M. Okay. So sales is same for both products. And this is the total of the two. ठीक है, वेरिएबल कॉस्ट ये है और ये इसका टोटल है. अब ये कंट्रीब्यूशन इंडिविजुअल है, ये टोटल है. अब ये फिक्स्ड कॉस्ट इज फॉर द होल मंथ. ओके, सो so they haven't divided the fixed cost. इसको यहाँ डालें and they got profit here. This is the marginal cost statement you already have with you. Okay. Now you are required to compute PV ratio of each product and then compute PV ratio, BEP and net profit for the following assumption. First, आपको PV ratio for each product निकालना है. Okay. How you will do PV ratio for each product? Tell me how much it is. 18,000 upon 60,000 into 100. 30,000 upon 60,000 into 100. Okay. This is your PV ratio. For each product, compute the PV ratio, break-even point, net profit for the below assumption. Okay. Now they have given you an assumption. Sales revenue divided 60% to product L and 40% to product M. So what you have to do here now? Okay. Take this total statement as it is. Okay, so I'll just show you. Let us do one thing. We'll take this there. Okay. One minute. Okay. Come back. Okay, so can you see this problem? Problem 10 here. Okay, so what we have to do here is see just the first point is PV ratio. Okay, then okay, so L, M, and total, right? Okay, L, M, and total. So now L is now what is 60 and 18. I'm not writing the variable cost. Okay, not required. 60 and 18. Okay, contribution is 18. And what is here? 60 and 30. PV ratio for L is 25%. For M is 62%. How come? It is 30 upon 60. It looks like 50%. It should be. Varshini? Now see if I do see.
1,20,000, 40%.
So for
Sales
L,
revenue 40%, sir.
50%, right? This is 50%. Okay, you are talking about this part.
Yes, sir.
Okay. Okay, so this is what 30% and 50%. Now here total is what 120, 48. Okay, fine. Have this anyway here. Okay, and fixed expense 36, 12. Okay. This becomes 12. So now what we are saying is, let's take the whole thing here down. This is one sales revenue 60% to product L, 40% to product M. So basically what we will do, just keep this total statement as it is. Okay, and take 60% of this 1,20,000. This, just take this out, clear this. PV ratio will remain constant, okay, irrespective of your change in product mix. PV ratio 30% will remain constant. Okay, so now if I remove this 60%, okay, 72,000, and this is 40%. This is what you said, right, Varshini?
Yes, sir.
72 and 52. Okay, and now contribution, if I want to take out, it will be 72,000 into 30%. ठीक है, समझ में आ रहा है सबको? Everyone is understanding? रोहित, आपको समझ में आ रहा है क्या कर रहा हूं मैं?
Yes, sir. Yes, sir.
Okay. So after the class, Rohit, you can just stay on for 5 minutes. ठीक है? थोड़ा सा बात करेंगे. So Rohit can stay on after this class. I'm saying towards the end.
Okay, sir.
Okay, so this is 21,600 and this one is 24,000, 48,000 into 50%. Okay, this is what we got. And okay, what else they are saying? Find out the PV ratio, break-even point, and net profit. Okay, so PV ratio, break-even point. Here again, let's get a profit as well. ratio for each product and then compute PV ratio. Okay, this much we have done for each product. Okay, and then we have to find for the whole thing. Okay, this is one. And the second option will take, what is the second option? I think 60 this side and 40 this side. Okay. I'll put it just below this. Okay. So what is second वाले में क्या है? Sales revenue यहाँ 40 हो गया, वहाँ 60 हो गया. Okay. Here it is 40 and there it is 60 in the second case. So basically, just remove this. Total contribution value. Right, this is option 1. This is 40% and this will be 60%. $21,600 plus 24,000. Which one you are saying? Yeah, this one, right? This two. This is 60%. This is 40%. Okay. So this is the first one actually. 60%, 40%, and then 40%, 60%. So this basically will be, I'll just do this as 60%, okay, and do this as 40%. Here, okay. And here it will be just other way around. This is 40% and this is 60%. Okay. Okay, and these are your PV ratios. So now let us see for the whole thing, for total, what we are getting is, this is 1,20,000 and this will be what? Sum of the two. Okay. This will be 1,20,000. Yeah, and this will be sum of the two. This is your fixed cost and profit will be this minus this 9,600. Okay, in this case again, you will have contribution, total contribution will be this plus this. Okay, so profit in both these cases are 9,600 and 14,400. So what all they have asked us to prepare. To prepare, compute the PV ratio and then compute the PV ratio, BEP and net profit. So net profit we have computed. PV ratios also we have computed. So total PV ratio if you want. See from here we can compute the total PV ratio. Okay. Let me just put this as this is 1 and this is option 2. Okay, this is 1 and this is 2. So net profit we have found out 9,600, 14,400. Okay, and PV ratio you find out how much is that. PV ratio for total you have to find out will be 36 upon It will be 445,600 upon 1,20,000 into 100. 38% in this case and 42% in the second case. Okay. (38% and 42% is the PV ratio. The last thing what you need is break-even point. Okay. Break-even point, how much it will be? In both cases, it will be F upon PV ratio. Okay. So basically your break-even point will be F upon PV ratio. Okay, here it is this much. Here again, F upon PV ratio will be your break-even point. Okay, you're getting these answers matching. This is what? This is your BEP. Okay, this is your PV ratio. ठीक है? अभी कोई स्टेप नहीं समझा तो आप पूछ सकते हो मुझसे. Any step you didn't understand? Last is also calculate profit estimated on sales up to 18,000, 1,80,000 per month for each of the sales mix provided above. Okay, sales up to 1,80,000. Just calculate profit he's saying. If the sales for these two sales mix, no, here 1 and 2. Yeah. So what he's saying, let me just save this once. Next part he's saying is if the sales is 1,80,000, total sales is 1,80,000. Okay. Then what will be the profit? So I can get it directly. You'll have to calculate. Okay. Profit is going to be this much then. Okay, 32,400 in this case. So what you have to do for the second part, what he has asked is just put in here it is 1,20,000, right? Just replace the sales by 1,80,000 in both cases. So the sales mix will change 60 and 40%. Similarly, your contribution will also change accordingly, right? And you will get your PV ratios, and you will also get your, and fixed cost will not change anyways. Okay. You don't even need the PV ratios here. Directly, you just need to get the profit. Okay. So just you have to change this to 1,80,000 and then you will get the answer. Okay, it's just asking the profit if the sales is up to 1,80,000 for each of the sales mix. Okay. Fine. Any doubt? This was your illustration 10. Okay, this is assumption 1, assumption 2, 38, 42, correct? This is what we got. Okay, and actually, you know, this 1,80,000 point, he himself has not calculated here in the study material. Okay, they haven't calculated it. Okay, but you can calculate it that way. Just replace this by 1,80,000. You will get it. Okay. Now, next problem is 11. So this will be our last problem. Okay. So after this, whatever problems are remaining, we'll just pick up one by one. Okay. We'll be doing other chapters in between. I'll just keep on picking. So you will, the chapter will also get revised and will complete all problems also. So basically we will complete all problems in the study material before your exams. Okay. Of all chapters. Okay. So now what is this problem? Let us see. This company manufactures and sells 4 types of products. Okay, A, B, C, D. Sales mixes, these 4 are the sales mix. The total these 4, you will get 100. Okay. So now you have, so these are the 4%, and total budgeted sales are 60,000 per month. Okay, so you have got budgeted sales 60,000. So multiply 60,000 by these percentages, you will get individual sales of these 4 products. Okay, and then you have been given operating costs. Product A is 60% of selling price. You have got individual selling price now. Then you just do 60%, 68%, 80%, and 40%. Okay, you will get what? Variable cost. So you have got variable cost. You have sales, you will get contribution. Okay, and then you have got fixed cost total. Just add all the 4 contributions, you will get total fixed cost. Put it there and you will get total profit. Okay, so now calculate break-even point for the products on overall basis. Fixed cost upon PV ratio. Okay, and also calculated break-even point if the sales mix is changed. So it is this here now, right? This is your sales mix. Now just change it to this much. Okay, and then calculate break-even point. Okay, problem is very straightforward. So now just tell me 41 2/3%. So how much percent it is actually? How will you calculate in your calculator? 41 2/3%. You know, just
41.
tell me. Do 60,000 of 60,000. Calculate 41 2/3%. Tell me how much it is.
$25,000, sir.
How much?
25,000.
25,000. Very good. Okay, so I'll just tell you, do you have any direct function in your calculator to calculate this fractions 41 2/3? How did you do it, Nandini?
41.66%, sir.
Okay, good. Okay, so what she did is 41 2/3. So basically 2/3 is equals to 0.66. Okay, just make it 41.66%. Okay, this is how you'll have to calculate that. Okay, good, well done. So right, so this problem you understood. Any doubt you have in this problem? You can just go through this problem like this directly. Okay, so now first thing is we'll do 60%. It will multiply by these 4 percentages. Okay, then your sales will come to this here. Okay, these 4 are your sales. Right, this is the second one, 25,000 we just talked about. Okay, sales you have got. Now take these percentages, variable cost percentages. Okay, these are your variable cost percentages. Apply this 20,000 into 60% here gives you 12,000. Okay, these are variable cost percentages, so you won't get contribution directly. These are all variable costs that you will get. Okay, and then this minus this will give you 8,000 like this, all these, and then this is your total fixed cost. So that's how you get the profit. Okay, these are all your individual PV ratios, and 35% is your total PV ratio. Okay, so big break-even point on overall basis will be how much? Fixed cost upon PV ratio. 14,700 upon PV ratio. Okay, this will be your break-even point. And then what they have asked is also calculate break-even point if the sales mix is changed. Now we have the total sales here, 60,000 already we had. Now just apply these percentage. Okay, just apply this sales mix and you already have this PV ratio. So if the mix changes, PV ratio will not change. So once you apply this 25, 40% and all to 60,000, what you will get? You will get this sales, which will be different, of course. So for example, 25% of 60,000 is 15,000. First one will be 15,000. Okay, second one 40% of 60,000 is 24,000. So this will become 24,000 like that. Okay, sales mix will change and then you have the sales multiplied by PV ratio. You will get contribution again directly. Add the contribution, you will get this, and you already have the fixed cost. Okay, so you will get profit. Okay, so now what will be the second thing is break-even point will be F upon PV ratio. Okay, so in this case also total so total this will change. Okay, your total contribution will change a bit. Okay, because each of the four proportions are changing, so total will change a little bit. You can see this here. Total has changed a bit, PV ratio, right? So fixed cost will remain the same. So fixed cost upon this PV ratio is changing. This individual PV ratio will remain the same. Okay, but when product mix changes, your total PV ratio changes. Just remember that. Okay. So that's how you will get your break-even sales, right? So till here we have done. So I'll just mark this so that I will remember. Yeah. Okay. Okay. So I'll just remember that this is where we had left. Okay. Fine then. So any questions you have? No? So that's all. So I'll close the session here. Rohit, if you can join me for another session. Okay. Same link just now. Okay. Okay. Thank you.